Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a company that's trying to avoid running on empty. We're talking about Zoomcar Holdings and their latest filing. It's a bit of a financial roller coaster. Let's jump in. Zoomcar just filed what's called an 8K. It's basically an update they have to give the SEC and investors about big changes that happen. The main thing here is they've just completed the third closing of a previous offering to sell more stock, but there are some interesting catches. This report is dated in late March of 2025, so it's pretty recent. That's important because everything we're about to discuss happened around that time, meaning that Zoomcar is keeping their financials up to date. Before we get too deep, there's something important to understand: a reverse stock split. Basically, Zoomcar took 20 of their old shares and turned them into one new share. It's like trading in $21 bills for a $20 bill. The total value should stay the same, but the number of shares is much smaller. They did this to try and increase the price of their stock. Often companies do this if they are afraid that they will be delisted from a stock exchange like the Nasdaq. Now, about this third closing, back in late December, Zoomcar announced they were trying to raise money by selling securities. Think of these as stocks and warrants to investors. They were hoping to get somewhere between $4 million and $30 million. In this third closing, Zoomcar didn't actually receive any new cash, but they did issue more stock. They did this to settle old debts and agreements with some investors. Zoomcar sold a bunch of shares, over 500,000 of their common stock. They also issued warrants, which give the investors the right to buy even more shares in the future. There are two types of warrants here, Series A and Series B. The Series A warrants let investors buy over 6 million shares at a price of 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 6.24 each. These securities were sold at a price of $31.20, but the important detail is that Zoomcar didn't get any cash from this third closing. It was all used to settle debts. Aegis Capital Corp was helping Zoomcar find investors for this offering. They are called a placement agent. But since Zoomcar didn't get any money in this third closing, Aegis didn't get paid any cash or warrants this time. Here's where things get interesting. Zoomcar and Aegis were actually in a legal dispute, an arbitration claim. They settled this claim by giving Aegis $7 million worth of securities in this third closing. This included stock and those Series A and B warrants we talked about. Zoomcar also settled a debt with their corporate lawyers, the law firm. They did this by giving the law firm $4 million worth of securities in this third closing, which included stock and Series A and B warrants. The report was signed by Hiroshi Nishijima, Zoomcar's chief executive officer. That out, let's zoom out, sorry for the pun, and look at the big picture here. Zoomcar is clearly trying to manage its finances and resolve some outstanding debts. The fact that they didn't receive any cash in this latest stock sale raises some questions. Instead, they used the stock to settle debts with Aegis and the law firm. It's like using your credit card to pay off another credit card. It solves the immediate problem but doesn't actually bring in new money. One of the notable risks for Zoomcar is how much they are relying on these kinds of deals to stay afloat. Issuing more stock dilutes the value of existing shares. The warrants also add uncertainty because if the share price goes up, the warrant holders can exercise them, which adds further dilution. The reverse stock split is another move that shows they're under pressure to keep their stock price up. So what's the bottom line? Zoomcar is facing financial challenges. They're trying to manage their debts and raise capital, but they're doing it in ways that could create problems down the road. Keep an eye on their cash flow, their debt levels, and how they manage these complex financing deals. Thanks for watching Corporate Decoder. If you found this analysis helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. Until next time.